Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Today's agenda, we'll go through our market update, update the outstanding earnings trades, and then go through Joe's analysis. So let's get started here. So obviously, big news was Trump declared the winner, and markets really jumped, especially the Russell. Despite kind of the rates kind of, I mean, we're up almost up to 4 or 5, which I think is a negative overall, getting above there. So we're right kind of in that range, but definitely market reacted well there. Uh, as far as overview, we got SPX, Russell, NASDAQ all in one. Dow, slipped into two a couple days ago. I'm sure that'll reverse shortly after today, I would think, but it could be a day or two. State ones have come down. We're at 36, so well below the 45% overbought kind of line. And the pie went from 55, so we got the crossover down to 47. And eights have been pretty steady, right around that low 20s. So we'll go into the analysis in a second. Just sector overview. You can see we actually have more bearish than bullish. A couple floors. That's healthcare, energy, and then you got staples, utilities, materials, real estate, all in two. And then the rest are holding in one, and they've been holding in there a long time. So it's kind of looking like I'm not going to call them market leadership, but they definitely held up through little miniature kind of pullback, but um, nothing significant, just kind of uncertainty going into the election. So, all right, let's look at the pulse here. So you can see Monday, kind of hit the low of 34%, basically 35 in state ones, and then got a nice kind of bottom there. Next day up, obviously we're going to have a bunch of transitions. I would think after today, if we continue with this kind of, if we close up around the highs, especially the Russell, I mean, that's a huge move overall. Um, like I said, the eights, not much going on, pretty much right in the same neighborhood as last week. And, there's just not, too many sevens, that can flip over, about 6%. So, in order for the eights to really start piling up, we'd need the ones, to go the two and the fours, twos to go the four, and then four usually goes to eight. Um, but we haven't been seeing that. So, I'd expect a lot of these twos, we had this kind of build up. Um, back here is September kind of build up. Got up here to 21. Yeah, back here, same type of thing, 21. Back here, 21 for the state twos, when they build up. And um, yeah, so, we got 21 pretty much reversed, and, we'll have a pretty big down right now, tomorrow, I would guess. But, and, the fours, we look for fours for, follow throughs once it gets up here. And, we're just not seeing much in the way of twos to fours. So I um, think just based off of this, we'd expect run back up, about 45. So highs and lows. We never got any lows really. We'd kind of a down day there, but nothing really in the new lows. So I'd expect some new highs definitely today, especially with the breadth of the market. This is 2,000 stocks, up 5%. I mean, that's just a huge day. So I'd expect a nice spike in highs and I was kind of looking at this too, the 20s, just crossed yesterday. So we had, the bearish on top for a while, and then, yesterday, right before the election, I guess election day, they crossed over, same thing with the 50s, had a little bit, with the bearish on top, and then, crossed over. I guess, everyone was betting on this outcome, um, to come through. So, and 200s isn't really close. So, let's sit there. Let's look at bullish bearish real quick. Same thing. We got the cross, right here. Friday, Monday. It's pretty much the high point for the bearish, and then started moving back. So we do see these kind of moves before, where it just crosses and then turns back. So we'll have a pretty big upward movement on the greens tomorrow. So looks like we're at least seasonality wise also generally positive going into the end of the year these last 2 months. So that's kind of where we're at. Let's look at the modeling. So SPX been here a long time, 57, average 43. Current we have exceeded the average move up here when we're banging up against target three. So that was 5879, and we're at 5900. So we're above that right now. So when we do get above this target three, and it basically, ideally, we'll see it. It'll come up here. We'd like to see it show support, and then it can really take off from here. No guarantees, but this um, can be like a launch pad if you go back through a bunch of the modelings, like when it pops up above and then shows support right in here, and then just take off. So that's kind of what not a guarantee, but you know, fairly strong chances of that at this point. Um, Yeah, so you have the downside support 5879, so that's target three, and then 5800 is bottom of the range. Then nothing nothing to the upside because we're at all-time highs. So let's go into the charts. So last week we talked about 20, that broke, but the 50 pretty much held. You can see here, big down day Thursday. Basically came right to the 50. Next day held, and then got a big up. But kind of tested that level. So you had 4 days of testing the 50 on here, and now we're back above. So you can use your 20-day moving average as kind of the key. That's 57.76 as of yesterday. And that'll be higher tomorrow, but. So that's kind of where I'm looking at here. The range, which so this is the bottom of the range, 58, and then tops 6,200 somewhere up here off the chart. So nothing. As we make new highs, there's no resistance or anything like that. So all we got is support to the downside, and we're off. We're above our target three. So. We'll see how far it goes. Russell, so pretty much right around the average days. We're up above. So there's the target 323.35. So we're about 30 points above that right now. Same thing goes here, kind of shows support above target three, we can take off. But no guarantees. But obviously, getting above target three and holding them up there is very bullish overall for the markets. But this pretty much held that 2200. We were talking about, 50-day. You can see here just, this whole entry price, um, this whole thing, pretty much held, the whole time it was in here. Um, so, came back here and tested again, last week, so but that held, big up day yesterday and now way up, way up here now. So let's look at the chart here. So, blue passed, this last time we got up to 2300 and just prominent reversal. So we're well above that now. Um, as far as the ranges, we got 2300 to 2500 since we're comfortably above 2300. So, up to 25, which would be up here. And that would be if you go back in the chart, the all-time high is back here and 2461 looks like range, 2461. So within shooting range of that all-time high. So it's in our band now. So 23 to 25 all-time high. That would be your resistance there. Support will be target 323.35, and then I meant to, we don't use the 20 here, but the 50 pretty much held. Looking at this chart here, entry price 2200 pretty much held. Same thing with the 50, big down day, 1, 2, 3, and then kind of took off yesterday. So that's the big thing. The 50s held for both major indices, and we're up into a new range that we haven't been to in a long time. So uh, downside, you got 2300. You got your 50-day, which is way below now where we're at. So I just look at that, holding at 2300 and really, also staying above, target 3 as far as Russell. So that was it on that. Like I said, the rates, 10 years, not sure. I mean, pretty much like the Fed cut. Yeah, it's like Fed cut and it just took off. So, this market opened to bids and asks. So I'm not sure if, a lot of people, people holding these are dumping them or, but obviously the rates have gone up significantly. Uh, zero point 0.6, we're up to 3.4 now. So like 0.8, uh, almost 1% really from, the bottoms here. So that's just something to keep an eye on, kind of in that range where this starts becoming a headwind. Um, so, and we got Fed tomorrow. So Fed, good segue there. Fed. So we're at 475 to 5. So 99% pretty much, it's guaranteed for a cut, as far as the markets are predicting. If they do it or not, I'm not sure, but pretty much, this is usually not wrong. Uh, as we go, kind of walk out to December, expecting another kind of quarter, and then it's really between December, January, just one more, because from 475 to 4.25, it's just 2 quarter cuts between now and January. So they're not sure if it's December or January, but that's kind of where we're at. So a lot less aggressive, cutting wise from, what we've been monitoring over, a long time. So balance sheet, we should cross 7 this week. So we dropped these little meager drops, back to kind of the COVID uh, entry level. That's one, only real concern is if some kind of liquidity stuff starts happening. Always keep your eye on that. Uh, like, but you can see it's just trickling like 10, 10 billion, 10 billion, 10 billion, just kind of real slow trickle. Back here, yeah, you're getting 70 billion. So we've really slowed it down. Gonna be right there on that 700. Just kind of, that's, yeah, the only, outside of like some geopolitical thing, the only other concern really is the liquidity. So I'm just kind of looking at rates. You can see pretty flat, 4.6 on the 1 month and 4.4 on 30 year. I think those as of yesterday. So these are actually up higher today, but getting pretty flat here. Uh, from a year ago, definitely, lower than a year ago, at least temporarily. We'll see if those yields keep going up, but um, yeah, not can't really explain the reversal in the rates that well without really diving into all the treasury auctions and things like that. So, but that was it. Open up to questions, comments on the market in general. Anybody? All right, not gonna force you. Okay, we'll go through earnings real quick. Just close out all these. Okay, quite a few earnings trades going on. I'll just kind of walk through them. So bullish pre-runners, nothing active, but we got 5 closed. So we had Exxon end up closing out loser. The other 4 are winners. So 80% right there. Bearish pre-runners. So we got these 2 actually close out today. So they're slightly up. I was kind of following them earlier. Like they're down, both of them are down pretty decent today. So these will definitely both be profitable. But we'll close these out. Before earnings come out after the bell. So we got some bullish runners, quite a few, 5. I'll go to the close. So we got one close, First Solar, and that closed out uh, yesterday, the 5th. So that for nice gain had a big spike. And we got 5 open. So, gold, I was telling Joe this morning, like Goldman's up like, look at this, like 13% today. Like that's huge. Like a bunch of the banks were up, like Wells Fargo is up huge too. And yeah, I don't know. Not the first thing that would come to mind after, Trump getting president, but less regulations, I guess, kind of what me and Joe were spitballing. But uh, yeah, so most will be good. This one, I don't know why the home build, like all these will be pretty good. Home builders were down pretty decent. Not sure why. I think probably just rates being higher. Um, but that's the only kind of issue. It was up, but so 169, so about $5 below. So this one will be down. The rest, Goldman definitely close out. So rest of these will be up. So they're looking good. Um, so far so good. Bearish runner. I think this one's up decent. But it's up pretty good today. So this will probably flip negative after that. It's up to 94. So if it holds there, so this will be down a little. Um, Nothing closed in either of those. Vol rise, this one's been doing great. So we had another one close out. We had 2 of them. Closing out the 11th and the 13th, and then we had um, XPO. That's the first one closed out. Nice profit, and then ACAM. Yeah, that closed out on the 4th, hit the profit target. Excuse me. So, like I said, these have been strong overall, the strangles. So let's hope it continues. With the market volatility, that's been a good trade the last few quarters. So, and non-mover, this PII is still down decent. Within the band. I mean, 70 is kind of a lower band. So, and then Fang. This one I think is up today. So yeah, 183 up pretty big. So yeah, it should be good. Right around, $3 over the middle strikes. So hopefully we'll close that out, after today. But well, all in all, it's been pretty good. Just a couple losers, but overall, pretty strong. I'll open up to questions, comments on that.
Hey, Josh,
Mm-hmm. Kelly.
we're having a pretty strong upturn right now.
Right.
And would you expect any kind of pullback over the next week or so, week, 2 weeks?
Uh,
'Cause this is pretty dramatic up.
yeah, it's pretty dramatic. I mean, honestly, not. I mean, Joe has all the post-election stuff. Um, and like I said, unless there's some kind of liquidity thing or the Fed does something funky, they're coming out tomorrow. So, unless their language is very bearish type stuff, um, because we had that horrible employment report,
Yeah.
right before the election. So, I mean, the market still thinks they're going to cut. Yeah, unless the Fed, really gunks it up. I mean, I don't see much, outside of like I said, geopolitical, something big going on in the world or liquidity issues. So, just keep your eye on the 10-year. Yeah, if that really goes higher, that'll turn things around.
Yeah.
That 10-year. So,
Over the last year, we've heard a lot and talked a lot about in the office space and how so many office buildings were just being turned back to the banks and yada yada. Now
yeah,
I read about banks have a huge debt on their books for all
right.
this real estate, but I don't hear much about it related to, oh, if this happens, we'll get a big market downturn. It's like it went quiet.
Yeah. Well, those things take a long time to play out, you know. Like the real estate's not like the market. It takes a long time for things to play out there, and um, usually involve, especially if there's uh, like legal proceedings,
Yeah,
involved with a lot of that. If there's defaulting and things like that.
yeah.
So
Okay.
yeah, I mean, it's a slow move, very slow moving, until it's not, and then then
Yeah.
like yeah, then it's like, oh my God. But yeah, I always keep my eye on the real estate stuff. Follow a guy on Twitter about that. So
All right.
Hey,
Thanks.
Josh,
yeah. Hmm.
I would just add a quick 2 cents, in terms of a pullback in the market. I don't think it will happen, and I think it's probably a long shot, but next Thursday and Friday, we get a lot of, we get I'm sorry, Wednesday and Thursday, we get the inflation numbers.
Hmm.
If, for some reason there was a unexpected uptick there, I think that could be a catalyst for a quick sell-off, but otherwise, I'd be surprised if we got anything meaningful. I think people are going to end up chasing.
Yeah, yeah, especially after today. Yeah, and we're just doing the 1-2, 1-2. I mean, doing it a while. So as far as the modeling. All right, thanks, Lee. Yeah, thanks, Joe.
And yeah, this is Dave. I wanted to comment too on Lee's question there.
Yep.
Since it wasn't a very well, since it's not going to be a contested race, I guess there's not a lot of market. We don't know what's going to happen, kind of thing. So we know what happened. So I agree that I don't think there'll be a big pullback whatsoever. And we got another month of before transition of government happens.
Yeah.
So I wouldn't expect too much of a change either. We had a pretty weird jobs report where there weren't too many jobs created. That was kind of interesting, I thought.
Yeah.
But the Fed will probably cut. What I'm interested in going to see, like come January, what if the war ends because because Trump takes over, or if he'll fire Chairman Powell, and what Elon Musk will do as a cabinet member. That will be interesting to watch. God only knows how that's going to affect markets, but it'll be interesting to watch, in my opinion.
Yeah, definitely.
It sure will. And just to review the numbers coming out of the 2012, and we were coming out of the financial crisis. Basically, we were in a state one, and we ran 19% on election results. In 2016, it was actually a few days after the election that we went into state one, ran for 5 months, up just shy of 11%. That's 2016. And then in 2020, we're basically in state one. We ran 4 months, about 12%. So, whether it's taking the uncertainty out of the markets, whether there's a little earnings momentum, what have you, that's where we've been the last 3 cycles. And to Josh's point, recently we've certainly been 1-2-1-2, a very constructive, state setup. And some of those previous cycles were not quite that clear coming into the election from a state perspective.
Yeah, I think the only unknown as far is the House. Senate's already decided. President. That's the only thing up in the air right now. So. Okay. Yeah, thanks, Dave. All right. Anyone else before I give it over to Joe? All right, Joe. It's all yours.
All right, Josh, let's see. I guess I'm sending you a request to take over with this new, I don't know. How's this going to work here? Share. Let's see if I can.
There we go.
Yeah.
Should be good. I said, yeah, there.
Okay.
Got it. May I?
Yeah. Okay. But I can't, I don't see my screens. Unfortunately, I see that, but I don't see my screens. Damn it. Anyway, I did want to start out with AA. Let's see, bear with me. Okay, there we go. AAII, again, exciting times, and, I think fortunately as a country, we have some clarity, and this hasn't dragged on. So good for the markets. And here's where we are. What I thought interesting, from a sentiment standpoint, and this has been around for decades and decades, but look at the historical averages and look at where we were coming into this thing, almost spot on to the historical averages. So now I just want to see where this thing shakes out over the next few weeks. And again, this is, a snapshot on sentiment on how the market's, expected to perform over the next 6 months. So, we'll keep an eye on that. Not a ton today, but I just thought I'd want to go through a couple different things, starting with TLT that Josh talked about. It's just going to be interesting to see. We just went into state 8. So let's see if that turns out to be, an accurate state 8 or one of those, state 8 bottoms. So, certainly something to keep an eye on. I then figured, well, the election is in. Why don't we? This is a snapshot of our ETFs about 30 minutes ago. So this is what we're seeing today and the reactions to the various sectors. And they're the few charts I'm going to go through, and I think there are a couple interesting things. But as Josh pointed out, the financials, are rocket shots today, leading the pack, and can only assume, as Josh suggested, less regulation, more deals, and generally the PEs and the financials are friendly. So, you got room for expansion there. And then we got energy, drill, baby, drill. We've got the industrials, the consumer discretionaries and technology, the top 5. And I'll pull up each of those charts. And then, Josh pointed out some of the real estate down today. And, that's the biggest drop, along with, a little drop in consumer staples and utilities. All 3 of the losers are actually in state 2, but pretty insignificant state 2. So, we can go through this real quick. Here are the financials. And, something that was catching my eye was, the period of time. We pulled these up plenty over the last few months, but continues to be strong at almost twice, the normal average here. Didn't get back down to a state 2, and, off we go. So let's see, the longest, state 1 was back in 2021 for the financials. So we're at 60, basically 60 days now. 2.5 times that is the max move at a whopping 42%, again, coming out of COVID. So this is going to be, I'm guessing leadership going forward. It's been leadership. Let me see. Here's the August 5th low. You had virtually, you had one small hiccup in mid-September, and, virtually no pullback since. So there's XLF leading the charge after last night's decision. Next is energy, and, not a shock. Now, energy is in state 4, but, look, state 4, not very effective. Average move is down 4%. In this current state 4, we're up 2.5%. So, and obviously we're going to be considerably higher today, and this is going to transition. So, be interesting to see whether energy turns out to be leadership. I think generally the multiples there are, somewhat soft as well. So maybe you have, room from that perspective. You've got next the industrials in a state 1, but this is what started to catch my eye. And so you got the financials at 59 days in state 1. Here are the industrials at 60 days. Okay, so the market has had an eye on 3 or 4 different groups here. Here are the industrials. And we've talked about these little healthy mini pullbacks, but generally the market seems to have stayed healthy. And that's confirmed today. Here are the consumer discretionaries. Again, up into this 55, 60-day time period. So healthy there. Going to break out of 3, all-time high. Let me just confirm that that's accurate. No, that is not accurate. So we were a little bit higher, I guess, a couple of years back, but one hell of a rally from the January lows here, held an up channel. We got technology, which was a leader for a long time, and up. Let me see which state. Yeah, we're state 1 here. Not as long as those others, but what did catch my eye was, like I say, the financials, the industrials, and the consumer discretionaries. Looks like, from a state perspective, there has been money flowing into them, for the last couple months. To the downside, you get real estate, but, we've talked about this. This thing's had a monster run. Nothing horrible about that chart. The thing that caught my eye here also, so the couple that were in bearish states, average moves down just under 3%. This also is to the upside in its current state. So not a heck of a lot of weakness in the sectors that are a little softer or the election news today. There's, consumer staples, which, kind of flatlining here, just down 1%, no big deal. Has been in a state to, longer than you might expect, but, it hasn't gone down at all. And I think we got one more of these guys. The utilities, which talk about a monster run, especially for the utility, sector. I mean, it's just been off the charts. So, maybe this thing is definitely going to back and fill. But again, stay tuned. And, the index is up in this period of a couple days, where the average is, down about 3%. So I just thought, going back to look at the, initial snapshot of, the reaction to the election results. And it's a couple sectors that have, maybe been strongest with financial, energy, and the industrials. I think I got maybe two more to pull up. Just like to keep an eye on the semis just because, for, a long time, actually, coming out of the November 22 lows, the semis really were wonderful leadership. We've talked about how, the bloom is off that rose certainly for quite some time, but we're sideways. Nothing bad about this. I think I mentioned last week, I think the market may come November 20th, get back to an NVIDIA focus. So I don't think like the last quarter and maybe the quarter before, but certainly the last quarter, NVIDIA had its monster run and still has performed wonderfully, but wasn't the focus of the market anymore. I wouldn't be shocked if that changes come November 20th. And I'm just assuming they are going. It's just a question of how much they beat by if they don't have production issues with their forward look. I got to believe this may be a catalyst for the next run on the market, but we're a couple weeks off from that. So time will tell. Looking forward to seeing. We'll get a result from AAII. They come out every Thursday. So we'll see what the reaction is to the election results and how that is going to move sentiment. And we'll address that next week. So that's all I just want to talk about is really the snapshot to today's reaction to the results, which is there. And happy to discuss anything anybody has or turn it back to you, Josh.
Okay, anyone else? Questions, comments before we wrap it up? All right, well, thank you all for attending. We'll do it again next week.
Yeah, thanks, guys.
Yep, thank you.
Thank you.